Welcome back to Markets Today on CNBC-TV18. Now, troubled aviation company Spicejet tumbled in trade today. The stock, in fact, is down almost 40% in the last 1 year after the company reported steep losses in its financial statements. After much delay, Spicejet reported both Q4 and Q1 FY23 earnings, and it's not looking good. Spicejet reported a loss of 1,721 crores in FY22, much higher than the 996 crore loss that was reported in the previous year. Even in the first quarter of fiscal FY23, Spicejet's losses escalated to 784 crores versus a loss of 485 crores in the previous quarter, that is Q4 of FY22. Now, one of the big reasons for large losses is the steep rise that we've seen in ATF prices, as you can see on your screen. ATF prices are up 105% year-on-year and 40% quarter-on-quarter in Q1 itself. However, Spicejet has seen escalating losses for the last few years. If you look at that graph, you'll realize that in the last 6 financial years, from a profit of 430 crores in FY17, the losses have gone all the way to 1,722 crores in FY22. Now, there are several problems plaguing Spicejet. The company in August of 2022 delayed salaries for the second straight month. 2 more aircrafts, Boeing 737s, have been deregistered by the DGCA. And the Chief Financial Officer, Sanjeev Taneja, resigned on the 31st of August. Also, there are deep cracks appearing in the financial health of the company as well. The auditor has said that the results that Spicejet posted cast significant doubt about the company's ability to continue as a going concern. Current liabilities exceed the current assets by a large margin by 6,400 crores. And this brings us to the inability of the company to raise funds over the last few years, which is a big uncertainty as well. On that note, Spicejet has said that it is shortly engaging with investment bankers for a potential raise of up to $200 million. All right, moving on. The fifth headline today in stocks in the news, Biocon slipped 3% after the US drug regulator issued 11 observations each for 2 sites in Bengaluru and 6 observations for its Malaysia site. Rima is here with the details. Rima.
Thanks so much for that. So, well, the stock is under pressure because US FDA has issued 11 observations each for its 2 sites in Bengaluru and 6 observations for its site in Malaysia. The US FDA inspections took place in the month of August between 11th to the 30th. Now, we had a chat with the management earlier today, and they said that there were no systemic, no compliance issues which were cited post the US FDA inspection. There were no data integrity breaches as well, which were observed by the US FDA. The inspection was done for 3 different products also. So that was the reason why the US FDA came to the sites in the first place. The company will respond to the US FDA within the next 15 days. And as of now, they do not expect any impact on the company's product pipeline in terms of the approvals as well. So the company said no changes in the approval timeline.
There are no systemic non-compliances that have been cited in any of these observations that the agency has put out. And there are no data integrity breaches that you specifically talked about. Since we didn't have inspections since 2009, we have been waiting for the agency to get over to our facilities. This inspection was at 7 different manufacturing facilities at 2 different locations, Bangalore and Malaysia, for 3 new products. Post the inspection, we have no reason to believe that there is any change to that timeline. The inspectors didn't indicate any change to that approval timeline. We would be looking to consummate that and close the transaction by the end of the first half of this fiscal, first half of H1, as we said, and we are on track for that. We look to close that end of September.
All right. Well, moving on, Mohan Goenka, who's the Vice Chairman and whole-time Director of Imami, believes that the demand in the second quarter has not matched expectations and rural recovery is yet to come in. Speaking to us earlier today, he said that they are targeting 11 to 12% revenue growth in the second half of the fiscal. Listen in.
We haven't seen the kind of recovery we expected in this quarter, though the monsoons barring east have been good across India. But unfortunately, we haven't seen the rural recovery as of now. But we are extremely hopeful that maybe H2 should be a better year than what is in quarter 2. So we are definitely targeting about 11 to 12% growth as far as the H2 is concerned. Though it is not the season for Dermicool, the season would now start from February. We are very confident that we should get to about 140 to 150 crores.
All right, a whole host of other mid-cap stocks were in the news. Vahishta Unwala is here with the details. Vahishta, over to you.
Well, Dish TV has been the stock in focus today, and this is because the chairman and the non-executive director, Mr. Jawaharlal Goel, has stepped down. The shareholders of Dish TV have rejected the proposal to reappoint him. Yes Bank, which is Dish TV's largest shareholder with nearly 25% stake in the company, has opposed Mr. Goel's reappointment. Additionally, Yes Bank had sought the removal of 5 directors, including Mr. Goel, citing corporate governance issues in the past. Another stock which has been buzzing today has been GMR Infra. GMR Infra has a board meeting which is scheduled for tomorrow. Now, this is to consider and approve the raising of funds to the tune of approximately 6,000 crores in all. This could be in one or more tranches through the issue of securities, including a qualified institutional placement and foreign currency convertible bonds. Now, we know that on a consolidated basis, the company has a net debt of approximately 24,000 crores. This is as on 30th of June 2022. We also know that the net debt had actually gone up on a sequential basis. There has been an ongoing capex at the Goa, Hyderabad and the Delhi airports at present. Now, with the fundraise, there could be an expected equity dilution of nearly 25 to 30%, which is based on the current market price. Further, the fundraise could actually reduce the interest component by 480 crores by the end of FY23, which in turn may contract the bottom line losses to 651 crores, which at present is upwards of 1,000 crores. So all in all, this seems to be an EPS accretive deal with a rise in EPS of approximately 50%.
All right, thanks a lot, Vahishta, for that. Well, let's move on to a CNBC-TV18 exclusive now. Sources tell us that the insurance regulator, IRDAI, is likely to look at opening up insurance companies' distribution architecture further. It may allow individual agents to tie up with more than one insurer. How does this change the scheme or change the industry? Yash joins in. Yash, what does this mean for agents?
So, Sonia, of course, the thought at the regulatory body is to open up the distribution infrastructure. Very recently, the insurance regulator floated a consultation paper under which they've proposed to allow banks, which are essentially corporate agents, to tie up with 9 life, 9 general and 9 standalone health insurance companies from 3 previously. And now that thought is shifting to individual agents as well, where the thought at the regulatory body currently is to allow these individual agents to essentially tie up with 3 life, 3 general and 3 standalone health insurance companies, versus currently where these agents are only allowed to tie up with 1 life, 1 general and 1 standalone health insurance company, which means they can sell products only of 1 life, 1 general and 1 standalone health insurance company. I mean, right now, if this particular proposal, which is at the thinking stage right now, if it goes through, it will require a change in the Act and hence a parliamentary approval for the same. But before all of that, IRDAI is likely to float a consultation paper or a draft paper for taking stakeholder views on the same thing. As far as companies are concerned, this will be particularly negative for the Life Insurance Corporation of India, or LIC. That's because they have the largest agent strength. More than 50% of the individual premium come through agents. They have more than 50% of the industry total agents. And if this proposal comes through, then it will become much easier for private life insurance companies to sort of pay a little more commission to these agents and poach them from LIC and bring them on their side, which essentially will hurt the business at LIC. But as of now, it's a thought which the regulator is considering.
All right, Yash, thanks a lot for that. With that, it is a wrap on this edition of Markets Today. Thanks a lot for watching. Have a great evening.